Morning, guys. Johnny and Mr. Forex Wire. Just thrown on a wrinkly old shirt because I've just woken up. Lots to do today, so I'm going to have a little look at the Euro USD on the morning session. Just share the screen, and there's a thought process behind what I'm doing today. You'll see on here, I've gone on the 15-minute. Okay, there's a 15 minutes here. And I've got the 15-minute high, the 15-minute low. I'm reverting back a little bit to what I used to do on the 1-minute scalper. Yes, I'm using the ICT method of silver bullet, but I'm incorporating my own style, which was having the swing prior to that, which is something I came up with in 2021 when I was doing 1-minute scalper. So I'm waiting for a high or a low to be broken, and then I'm waiting for a return in or a huge continuation. From there, I mean, obviously the stipulation still stays in place, waiting for, I'm putting it on the 1 minute. I've got this silver bullet thing in. Okay, now you can see we're in the window at the moment. Excuse me. And when you see we broke a structure low, okay? And we've now got a fair value gap. Okay, so I don't want to rush into anything for this week. I want to see stuff sort of play, so I'm going to be a little bit more cautious with my entry, and I'm still going to mark this one up. Okay, 10 for 10. And what I really want to see is a huge displacement, if I'm honest with you. Like from here, we've got a high, and I want to see a lot of, in this instance, it would be I need a bearish confirmation. For me, there's not enough. You've got a doji, little bit of a bearish candle, bullish candle, bearish candle, bullish candle, bearish candle, bullish candle. So there's still a fight. If you notice between this range, I want to see a nice big displacement to the downside of maybe around about 8 to 10 pips, because I'm going for a 10 pip drive anyway. So if you think about it, this is the method of me madness, okay? If I'm heading for 10 pips, if I'm waiting for a displacement of 10 pips, okay, within that, in this instance, because it's going to be bearish, because I'm going to have a 10 pip drop, okay, there should be a displacement, and not displacement, there should be a fair value gap up here within that 10 pip move. So it's already producing the liquidity. So there's going to be, in my opinion, there's going to be, like I say, a take of liquidity on here. So let's see if this drives. Now, let's see if this reacts from here and drives down, and it drives down by 10 pips. That's fantastic, because now I'm taking liquidity, and then when I'm going to create the liquidity, you create the liquidity on the pullback, which will be back into the fair value gap. And then I've already done the TP area because that 10 pip displacement, and then I want to go on to attack it, So what we'll do is, yes, I would have normally entered this one now. Okay. Yes, I would have normally entered this one now. It's wicked entry beautifully. Let's just see if this would have given a 10 pip. I think this way is a little bit more aggressive to a style that I want to try, if that makes sense. Yes, I believe the silver bullet will work. I just think it's a person's interpretation of it. But because I'm going for a 10 for 10, like a 10 SL, a 10 TP, I want to see the displacement and give me either the bullish or the bearish move, and give me a 10 pip move, because I always work upon two things on the market: the take of liquidity and the creation of liquidity. So the displacement has to show me a 10 pip move and it be aggressive out of this previous swing, whether it's, and like I said, this occasion, I would need a lot of black candles, selling pressure, displacement down, taking the liquidity from the previous structure here, market structure shift. And because I've got that displacement, I should then be able to say, right, it's creating an order, which is it's giving you this area of 10 pips. So there's got to be a fair value gap between here. Then I'll go for the return of creation of liquidity into the fair value gap, if that makes sense. So because I've sat on my hands a bit here, this looks as if this might be the sort of thing that I'm looking for. Okay, so if we just get rid of this, we get rid of this, and if I get rid of this, and if I just bring out the fire wand, as I call it, fire wand, make that text black. I'll make that orange. I'll give it a 2. So I like to put this on just to be visual. So we're going to follow price for a little bit. Okay, so we've took a structure here. So this is consolidating for me. Yes, we've broken out of the tippy top. Okay, we've broken out of that tippy top. Sweep of the 15-minute high. So I'll go on here. And like I say, I like to be visual. When you're doing this, you need to be visual. You need to mark things up. And then it's just going to help you when you're basically looking at charts. You're going to see, right, I've had a sweep. Why is that a sweep? It's a 15-minute high. Got fair value gap here. Right here, we've got an MSS, a market structure shift. I'm going to put that in the middle. I'm going to save this as an MSS. So that's a market structure shift. It'll be black. Again, save it. Save as MSS. It's going to tell me, yeah, you've already saved it. Yes. Click OK. So when I click this, I can see, right, that there is a market structure shift. Okay, so it's an MSS, but we need it to be breaking the structure. Okay, so in essence, it's not a market structure shift because there's no candles coming down on it. So you just want to break a structure. Black. Send that. Save as. BOS. Save. Click yes. And like I say, I just want to be. I think last week was a little bit of excitement on my part because I wanted to see this work. Now I'm sitting on my hands this time. Now you see what I mean? Because I've sat on my hands, I would have normally have getting in on this. This is now reversing on me. So this is a good thing. This is a good thing that I've sat my hands. What might happen now is we might see price might actually come up, mitigate into this, and it might massively spike through this end, you know? So we might get the 10 pip displacement this side. So this is just things that you need to do when you're fine tuning this. And like I said, I'll stop the share a minute. You just need to remember that when I'm doing these videos, it's not to be set out to be perfect. Okay. I like to put myself out there. There's no doubt about that. I like to be a guinea pig. I like to, because I do have not a huge extensive knowledge, but I have a good understanding of what I see market structure wise, candles. And I do believe I give a nice sort of context and give an understanding on what I see, and it comes across. I hope it comes across pretty well. Okay, so again, we've learned the first week. We got a little bit impulsive and got in a little bit too much. So we're sitting on our hands today. Now you can see why I say displacement. Okay, so now we've got to push here. Now I can mark this bit up. And this is what this is all about. We've got another break of structure. So there's a huge area here that I'm looking at the moment. So I'm going to get rid of that because we've got no interest in that. We didn't enter on this. Bottom of this, that's a 5 pip displacement coming out through here. So if I'll mark this here and I'll go right, that's a target area there. If this goes on to push above here, with further candles. I mean, I don't want this to be black. I want this to be like blue. The reason why this is green, it's because it's an engulfing candle. That there is what we call engulfing price. Okay, and like I say, I hope these videos, if anything, I hope these videos is giving you a little context of what I'm saying. This grey bit here is in the tram lines of this. So this is a fair value gap. It came in and it's mitigated straight through it. So I can get rid of that. We understand that that's been met. At the moment, the tram lines are here and here. So this here is a price inefficiency. Okay, so we'll just make that light. This is price inefficiency. So price will want to mitigate through this. There's been too much selling power, hence too much buying power, hence why it's a bullish candle. This is engulfing price, and why it's engulfing price is simply because it's taken out all of this sort of price action. And that price action at the moment from here, even from here down to here, is that's only been worth less than 10 pips in itself. Okay, so hence why this is why we don't want to be getting in on this candle. That there is not even worth a 10 pip push, and that there is around about what, that's a good half hour. That's a good half hour of price action. So this is why we need to sit on our hands. This is why we need to wait for engulfing price, which is what's happening here. Okay, and not only that, we want to see price. We want to see price continue to possibly up here, because from here to here will be a 10 pip move. Then we've got then we've got what we call the price inefficiency return back to here, giving us a new target price. While it comes up to this area, it's taken out all of the liquidity from that side, because there's the liquidity residing on this area here, simply because of this bit here at the moment. Okay, and if I just put a candle over here, we'll be coming up into order blocks on here. Okay, so again, we could get a touch up in the order block, come back down into the inefficiency. So then you can see here to here, there's a fair value gap. Without drilling too much in, drill that out, pull this out. So now I've got a draw on price if we go bullish. Okay, we've got a draw on price if we go bullish. Yes, so there looks to be a lot of lipstick on here at the moment, but I don't care about that at the minute. Just obviously you're seeing what I'm drawing up, and I hope it's coming across as okay. If I get a push off from here, like I say, I'm doing this live in front of you. If I get a push off from here, I do believe we'll get a push down. We may get a tick up, come back down into inefficiency, and then we might come up to take this up here. So this is what I'm looking at the moment. We'll just have to wait and see if it does that. If you bear with me, I'll pause the video because I think I've given a good explanation on that this morning. Again, we have not rushed into this. I've looked at this from a bird's eye picture view, seen that this is only an 8 pip range, not worth it. Sit in our hands. Yes, it was telling us to get in. I was getting in too early all of last week. We want the nice engulfer move out. Price engulfs, price action previous to the candles. We want at least a 10 pip displacement. Displacement is just a push of price away from the current price action. Engulfing displacement leaves fair value gap behind. It's going to come back in return. This is the optimal area I want price to push up into without taking this fair value gap. So if I get a good strength of blue candles coming up here, I will then set a 10 pip for 10 pip here. And then hopefully we've got the optimal entry. Okay, I'll pause the video, be back in a short while, guys. All right, okay, guys. Now, this is what I wanted to see. Now we're making headway. Okay, or we were starting to make headway. We have left engulfing price. We've left some inefficiency on the fair value gap. Now we were starting to see a little bit more of an engulfing here. Not quite a huge engulfing, but price is starting to move up. Now, I did see, I want to see a push, a breakdown. We did get it here. However, price is starting to test a little on here. We've got a little under 8 seconds to go. I want to see this candle steer blue. If it steers blue, we could get the continuation on the bullishness on here. I'm gonna sort of say, all right, we're gonna get in on an entry. Okay, getting in on an entry, and I'm just gonna mark this up. We're not getting in on it yet. This is the sort of position I want to look at, because we've got this area to play with at the moment. Okay, we've got all of the protection underneath here, and we've got the protection of this low here. So this is looking pretty good, like I say, if I'm honest with you. And the reason being is, obviously, this was all 8 pips of maneuver, engulfing first of all, but then we had a little bit of a flag coming back into the fair value gap. Now we're getting the bullishness coming up on here. Okay, so I think I might open the trade. I might put this as, take a look, I might put this as a trade entry at the minute. Let's have a look. So if I do, this is a fair value gap. I'll open a trade on a buy limit. All right, and I'll see, all right, 10 pip stop loss, 10 pip profit, and I'm just going to go for the 1%. There's my trade set up. Let's see if we're getting entry. I just want to see if this is going to be the optimal one. This will be interesting, because now we've sat on the hands. We've had the engulfing price come out. We've had a sweep in the take up on this side here. This was the original sweep of the 15-minute high. Okay, so we've come down back in, and now we're starting to take the new 15-minute high. So this could be, like I see on the higher time frame, 15-minute, a trend continuation. We've left the fair value gap behind. The 10 pip, and what I'm looking at here is a high previous to over here for an order block. There's a draw on price higher up over on here. So let's just say we get a sweep in. Going to keep this open. I'm going to pause the video. I'll be back in a short while, so we get that entry. So now we're starting to get the second drive. So we've got an A, B, C pattern. So like I say, I don't want to put too much lipstick on here. I'll put this on and let you see. We've got an A, B, C drive coming in. On that A, B, C drive, we're looking for the inefficiency. Okay, we can see on here, we've got fair value gaps. We'll just like sort of putting these in here. There's a draw on price here. Still a draw on price here. I'm just going to put this down to here though. Okay, so we've got the A, B, C pattern coming in. We've got the engulfing here, and there's a lot of like bullishness coming in now. So I'm liking the price action and the price move on this. The huge draw on price is this upper end. I would like to see a swoop back into play on here, coming back into these little draws on prices. Bounce off this. We've got a nice structure low and a further one down here, because I've sat on my hands. We had a sweep of the 15-minute coming back into the 15-minute range on this prior to market open for this silver bullet. Okay, this is acting just as I wanted when I was saying this is what we're after. Okay, so sweep back into structure of 15-minute prior to market open, coming in. I would have normally have entered here. This is where I was going wrong the last week. Like I said, last week it was a dip the toe in the water, and waited to break a structure. We came back up to mitigate into that. Then we had a market structure take on this here. Okay, it gave us an engulfing price. It started the A leg, B move. So as you take liquidity, you're going to create liquidity. Create liquidity into, see these areas here. It's a minor support area. It bounces off that. See the crosshair? Bounces off that. So that's the A. And then take of liquidity, creation of liquidity is the B leg. Bounce off a minor support. And then we'll go up flush to take liquidity. Reason to push, creation of liquidity. take of liquidity, market structure shift, new liquidity area now being formed, bullish candles leave behind a fair value gap, and the fair value gap will get rid of the ABC maneuver. Again, what you could see on the stand front on this is the fact that this might come down and then it might react up. We don't want it to do this one. We want price to start to come back down, mitigate into this area, as I did on this bias thought, and then take off. This could quite easily, if the euro is getting strong enough, it might just come down and bounce off and mitigate into this and then take off to go towards that higher draw on price. At the moment, it's heading towards the order block that I showed you before. There's a huge imbalance up here on the higher time frames, okay? So I'll pause the video. So there's one or two options that I believe may happen at the moment. It's either just going to continue to be bullish, come down and mitigate into this fair value gap. I really want it to come down and bounce into this area and then take off, because now we've got the engulfing and the displacement, because there's not much with regards to like the bearish candles. Prices want to push away, so it's a good sign. I hope this is making sense to you all. I do believe that this is like sort of playing out to be a good video and a lesson on what I'm trying to explain and show. Okay, guys, so I'll pause the video. One or two options: draw back into this higher fair value gap and then a take up onto that drawn price, or we'll get a pull straight back down. And again, you can see if this is going to be the reaction point where it's going to reverse a bit. We'll be back in a short while. All right, guys, so this is a hard decision now, okay? Because now we've got a fair value gap forming here as well. Okay, we've got a fair value gap and an engulfing price action. So when we look at the euro, very, very strong, USD weak. So what we could do, this is odd because it's an engulfing price, you see. Fair value gap touch back in, but the thing is, even if I went for, let's go for that strong continuation. Let's say I went like this and we go for the silver bullet. Let's say we go for that silver bullet buy. Look, the draw on price to come back in, fair value gap here, fair value gap here. So this is too much of a risky trade to take it from here. There's no reason why it wouldn't just go bang and then give us that move based upon the currency strength. But for me, I've got too much of a draw on price. When we've got all of this underneath here, you've got swing points of liquidity, but you've got the fair value gaps as well. So price is going to want to return back in. Look at this here. It's now going up to this massive, huge fair value gap here. It's taken this. It's going to want to go up towards, see a fair value gap. We'll extend this. Can we extend it to the right? And fair value gap. Extend to the right. If we go back along. So there's the draw on price to the high side, okay? That's your draw on price to the higher side. I'm still going to stick with the entry on here, to be fair. If it goes too far ahead, then I have to make the decision that, yeah, price has left the station. We're a good 15 pips at the minute. Just need to be careful. Need to be careful at the minute with regards to the entry returning. Price has just left the station. We could, or we may just have to leave this as a one we've missed today. But the concept that I've got in the idea is certainly there. Look at that. It's mitigated straight into those order blocks, or I should say fair value gaps there. So as we leave that station, we're going to long position. One here. Going to do one here. And silver bullet. We're going to enter a trade here, guys. 10 for 10, 1% buy. We'll enter one there. Because we're, like I say, we've had engulfing. Price is just engulfing a little bit too much. The USD's weak, and that is pretty strong. So we'll see if we'll get a return into this. I'll cancel that trade off. But I do believe price is going to want to come down to these lower bits. Okay, I'll pause the video. We'll be back in a short while. Let's see if we get the entry. Again, we just need to be a little bit mindful. Here comes the return on price. The only thing, like I say, that's put me off is this here. I've got a fair value gap here. So I've gotten tough one. We've got fair value gaps under here. The fair value gap. That's a fair value gap. I'm going to have it here. I'm going to bring the price into here. 10. But I'm going to put the order there. I'm bringing the order a little lower, guys. I'm going to say, yeah, I wanted to mitigate through here, but we've still got all these fair value gaps here. I'll pause the video, be back in a short while. All right, okay, guys. So we've been following this uptrend. It looks, I call this correctly by sitting on my hands. What I'm happy about so far on this little sort of session this morning is I didn't jump in on that. I didn't jump in on this. We had the 15 minutes. We had the swoop back in. There was a fair value gap on the return back into the market range. But I said I was going to sit my hands because I had a feeling this was going to get swept again for a continuation trend. We've had multiple areas of fair value gaps on its way up. And I've been slowly moving the buy limit up with the trend, because eventually price is going to want to come in and mitigate into one of these. However, what I don't like is the fact as we go up on the trend, we are leaving loads of areas of DOP, which is what I call a draw on price. So what we've got here, this did, in fact, it didn't like sort of come to this area, come down and take off. It went up and it just massively took off instantly, given two engulfing price action candles. Okay, so I can get rid of this. We'll get rid of some of the lipstick stuff. And the market structure at the moment, we've crashed through that area that I was expecting. So at the moment, the only thing that is off-putting on this trade is the fact that if price does want to reverse, which the euro, USD, the euro is pretty strong. USD is very, very weak at the moment. This is just going to want to smash up through and continue. I did draw something up last week on the cyclement of price on what I was doing for the Discord. It's been stuck on that market range on the USD. USD is really, really weak at the moment. So I'm expecting a crash through this area. I'm expecting a crash through this area to come back in to do a tank. I do believe the USD is going to drop today. The only reason why this isn't doing this right now is just because the USD and the JPY are right on the rock bottom. On the indicators that we use, you can see on here, the probability meter is 0% for long. So this is going to prime itself ready for the New York session, I do believe. But I digressed a bit there. Again, we're just waiting for the entry. I'm going to give this another half hour or so. If I don't catch the pullback to get in on this 10-pip move, then I'm simply just going to say today was a no trading day. And that's it, basically. Today is my birthday, so I don't want to be spending too much time at the screen. Again, if you're enjoying and you like these little videos that I put together, I do believe today's video has been a really good insight on market structure, and that we have spoke about it and explaining it, marking it up from the beginning with regards to the engulfing price, break of structure ranges. Before we come into this range here, we were stuck in an 8 pip price range, okay, for well over half an hour. Then we come into the market volatility, engulfing price, coming in to test the swing here that came out the 15-minute previous. Then as it comes back in to come into the engulfing FVG, we then get a take of that previous high, giving us a market structure shift, and then the rest is history. It's just leaving fair value gap, push, drive, engulfing price from out of here, leaving the fair value gap again, push, drive, attacking a fair value gap on the previous days of last week, and then again push, drive. These are 1 minute candles as well, guys. Look, within 2 minutes, another engulfing price action. It's engulfed out to the previous fair values here, and then again we're now starting to wean off a little bit. We're starting to see a fair few of the bearish candles now, so we might get a touch into this to get an entry. We'll see if we can get a touch and play and hold. I'll pause the video before I finalize off, but I do hope that you're enjoying the process that I'm taking you through at the moment, okay? I will see you when we close this off. All right, okay, guys. So as we have been very, very bullish here, you can see now we're starting to sort of wean out of areas of bullishness. We're starting to wean down, so these could be good target areas. However, now we've got a huge drawn price down below here, so I don't know whether I want to get in on a trade, if I'm honest with you, simply because the main trading window that I normally want to get in on is surpassed. So as you can see here, look at all the volatility, bang, 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 bang. The minute we come out of the volatility area, we start to wean off, you know. Now we're stuck. Now we're stuck in a 6 pip range, a bit like what we were here. Prior, it was 8 pip range we were stuck in. Come into the volatility window, bang, all the volume comes in, come out of the window, we go back into a 6 window pip. So for me, I'm closing off the trade for that for today. Hopefully what you've seen with this at the moment is a little bit of value in what I was looking at and how I was going towards looking at the price. We sat on our hands this morning based upon this here. I was waiting for a market structure shift, in all honesty, out of this consolidation zone. We got it. We left the station once, twice, three, around about 4 times in fairness, but we didn't get the retracement that we wanted to come back in on an entry. Now, there's no reason why this wouldn't come back in at some point throughout the day. React, give 10 pips, react, give 10 pips, react and give 10 pips. But I'm not here to sort of get in on the market after the volume. I want to be in on the market when the volume's there, if that makes sense. We had the correct bias overall. Okay, we need to understand that. Again, trading's not always about having an entry. It's about having the understanding of what you're looking at and what you're seeing. And I'm more than happy with what I've done with this today so far. So for me, this has been a great lesson just for to give some overview on what I was looking at, price action movement. And hopefully anybody that's watching this will be able to see the same in that as well. Yes, we didn't get an entry, but like I say, I go back on the point that trading is not always about getting in on the entry. It's about understanding the process and understanding the price action and the market movement that it is in during your time allowance that you're in there. And we understood that we were needing to catch these pullbacks. Okay, so that's the end of this video on the US, on the London session of the Euro USD. Okay, guys, if you've enjoyed this video, and again, yeah, we haven't got an entry, but it's a great market structure mark out on live price action as it's played. Okay, catch us all on the next one, guys.